Yeah, that's very interesting, where a new thought process, like four PPPs within a single economy. I don't think so. In the world, there is any other economy which can have four PPs, purchasing power parities, thought process in one economy. Because everybody has been, the US has one PPP, the EU is looked at. But in the EU, I could say there will be different PPPs. For example, Greece has a lower PPP when compared to Germany, when compared to Sweden or Norway. Italy has got a higher PPP when compared to Greece, but lower PPP with Germany. So, but on an average, EU has a good PPP. Now, keeping, it's a very interesting concept. Now, based on that, would you say that, investing in a foreign market with dollars, Indian rupees used for a dollar, don't you think that you're paying a higher price for a share in the foreign markets?
Yeah, it will look like a higher price if the rupee tomorrow increases. And that could be a reality going from 2036 onwards. But till such time it does not. It is a wonderful thing because let us say you had taken the rupee out prior to 1991 when we opened up our economy. Our rupee went from possibly, I think, 22 to 30 or something overnight. So that kind of a fall, you automatically benefited because your currency was outside. So a person who was invested there at that time would have benefited from the continuous fall of the rupee from that time till date. Now, if that were to reverse, obviously he will lose. So today the answer is yes, it makes sense. But tomorrow the answer will change when the fall of the rupee starts reducing and in fact turns the other way. And also, for a small digression here, if you were to take the dollar returns of the BSE since its inception, it has beaten the S&P by 0.2% over 45 years. Okay. And that compounding is a substantial amount over 45 years.
So, extending that point, I was just coming to the next topic with regard to the FPIs. The FPIs are pulling out funds. Is it because they are finding more better alternative investment proposals, or is it because the US economy is not doing so well with a $39 trillion debt, and therefore the bond prices are going there high? And are the FPIs pulling out there because EU has no possibility of investment? Australia, New Zealand are all closed. The investment is not there in any other place in the world other than India. That's what people are talking. I don't know if they're right or wrong. Then why are they pulling out the funds?
No, FPIs are driven by their mutual fund requirements. So if some investor there wants the money, they will take it out. And most of the FPIs who are available, active in India, India is not the only market for them. So when they see relative returns better in another economy in our neighborhood, they switch the money immediately. They are not your friends for you to go around saying, I brought in so much of money. They are not for that. They are there to make money for their customers. So when we ran up our economy, the share market in the last 3 years post-COVID, they saw fantastic returns and they wanted to lock into it. It is just simple human nature, and the signals in their computers would be screaming, saying, please get out, get out, get out, because that kind of growth is unsustainable, and we have seen it. Because now what we call as price correction, or rather a consolidation for the earnings to catch up with the price, is underway in India. Case in point is Dixon Technologies. It had a PE of close to 250 or 300, and it has since fallen 50% in the last 3 years. And at the same time, their profits have gone up 4 or 5 times, and today their PE is only some 35 or 40, and they are still growing at 60-70% profit. So their PEG is possibly at 0.5 from a PEG of 4. So this price correction or earnings catch up with price is being played out in India, So an FPI who has sold out Dixon at say 18,000 can now happily come back and buy it back at 12.
Okay.
So they are only driven by profits. They have nothing else.
So it is not the US economy, it is not. The mutual funds may be requiring some money, so they would have been putting
Possible,
it
or
back.
like I said, they see relative return somewhere else better, so they will go there.
So they are looking at, say, maybe a short period of 1 month, 2 months, 3 months. It depends on the returns on which they are expecting.
Exactly. So as long as they feel algos keep telling them that some other place is giving you a better return on a relative basis. Again, I keep stressing the word relative. So even if India were to grow at 30%, but they see that somewhere else is growing at 40%, they would still keep away from India.
So this, why I asked that question was, every day when I read the papers, they talk about, the Nifty falling, this rising, this FPI is coming in, too much of jargon being used with regard to the economy. And truly, I think that the people are not aware of the actual economic process when they're talking about investing in India. The advisors, who go.
No, everybody is aware. It's not that they are not aware. Everybody is aware, especially people who are committing money. Everybody is aware. The shrill noise is in the papers. Because they have to sell something. They can't sell a well-defined process. They can only sell fear. They can sell a smell of a scandal, or they can only sell that. They can't sell a well-oiled machinery saying that, okay, this FII came and spent this kind of money, invested this kind of money, made this kind of return and walked out. That's not news. That is just simple data. So that data is available in NSE website, BSE, RBI, etc., etc., etc. So nobody wants to publish data like that. They are looking for stories and they want to sell papers. So we should not be looking at economic stories coming out of papers who are in a competition with others to sell. We should be looking purely at the data.
Because as you said, the word is shrill. The cacophony is something deafening. If you look at the news, it's deafening. And sometimes when you read it, you feel, hey, come on, we see, as a normal person, you are able to see the economy doing pretty good. But the way the cacophony goes around, we feel there's no market, India's crashing, and there is no growth.
No, that's like I told you again. Many people had their Excel sheets for 1.4 billion people, when in reality it's only 300 million.
Okay.
So that is where the crashing comments come from people who have been frustrated or they think they've been taken for a ride. Because when they actually come to the ground and see the reality, it's only 300 million people and possibly another 300 million over the next 10 years as they push and expand this upper middle class to a 650 million population. But that 800 million which is at the bottom, they are not going anywhere simply because they are happy where they are. If somebody is sitting in a village, he is happy. If some sadhu is sitting in the Himalayas, he is happy. I mean, we are a country which is very easily contented. So you don't want people to be contented, then you are going to unleash chaos and anarchy on the streets. So in a way, our economy should not be seen from the same lens or the same data points as every other economy in the world does, because we are very, very different in our thinking, our makeup, our expectations. Practically at every level.
So, as you put it rightly, because based on the PPPs, when we look at the market studies, they keep saying pulled out, pulled in, given this, that. For example, let me read out a small point to you. These street engages budget safety but could go higher in near term. I just understand this,
No, they are just saying that investors have become cautious before the budget and they expect a good budget to help them possibly with lower capital gains or whatever. And if they do get it, then the market will go up. I mean, you have to sell news, like I told you. This is all just
marketing.
Just expectations. I mean, all this is irrelevant tomorrow after the budget is delivered.
Now, previously, the budget used to be interesting. I like to talk on the budget, because it used to be interesting. Let me come to that topic later.